Good evening, guys. How are you doing? Um, I just sat in front of the desk here and decided to just talk about gold. I haven't planned anything specifically, but we will see what it brings. Just looking at different charts and yeah, having a good time here. First off, I had a again no first before that. My voice, for some reason, whenever I get a cold, it goes to the voice, so it's a bit rough. It is what it is. And also, my lighting back here, 2 out of the 3 bulbs, for some reason they broke. So I have no lighting, more or less. And also, what I wanted to say is that I had a talk with Andy from Finding Value Finance. First part here, we are talking about gold and silver. In my opinion, gold and silver is in a bull market going higher over time. And also we're discussing energies, uranium, oil, some coal. We didn't talk nat gas. No, we didn't. But just giving my opinion on the oil stock chart, but also the uranium, which we follow roughly daily. We had been anyways when we had this dead period in uranium. And this Wednesday we finally had that huge burst of volatility to the upside. By the way, really good. So where should we start here? I just started here with the gold to silver ratio again. We will go through gold and silver. Miners, we will look through some ratios. Just again, I haven't planned anything, so we'll just take it as we go, really. So it might not be as coordinated. Sometimes it isn't, but as it maybe used to be, but we will take it. Hopefully you like what you see here, guys. And again, follow me on YouTube, Twitter, and also the Substack, where I do most of the videos. That will be on Substack. I have been doing that for roughly 3-4 months now, and yeah, we're just trying to get the most out of this bull market when it comes to commodities and energy, both of which I find the best place to be right now, even though tech has done well. But again, it's only a very few stocks, but they have done really well. But I think we'll check in on some of the ratios as well. So yeah, let's dive straight into business. So gold to silver ratio, one of the most important ratios that you should be looking at. If not daily, that might be a bit too often, but at least weekly. The weekly close on the whole gold to silver ratio. So zooming out here, we have roughly 15 years worth of data here, and down here we have the peak in 2011, where gold and silver peaked, not at the same time, but within a few months. I can't remember exactly. And we had a huge, this was the global financial crisis over here. You can see here, and then we popped big time again. The crisis hit. Silver dropped heavily. Gold also dropped big time, but actually gold outperformed silver at that point in time. And as you knew, or know maybe, everything else just went straight down, basically. We started to recover a bit here, coming down into some sort of flag here or sideways action, and then we had an utter big collapse in favor of silver. And that's when silver outperformed. This right here, maybe we should zoom in just a bit here so you can see when we go over to where we are now that actually these two are very similar. So we had the big peak, the big spike, huge move down, and then we started to form like a little bit, what am I saying here? A little triangle right there. You can see it there. And whenever we broke here, it was just a one-way street. We went from roughly 64 in the ratio down to 30. 64 down to 30. Remember these two numbers, by the way, 64, 30. They are very important. We can actually add in here roughly a horizontal line, because if my memory serves me well, they will come in handy later on. Usually when you have these big moments where a level is lost and you have what I call a waterfall like this, it could also be to the upside, yeah? So like an inverted waterfall, whatever you want to call it. these levels are very, very, very important. So yeah, coming down here, as you can see, wave 1, wave 2, wave 3, big time. We didn't get a wave 4 and 5. So it was like kind of a, you know, half-hearted attempt to really do well, gold and silver. They did well, but they were kind of like stopped halfway. And we didn't get that fifth leg down, or third wave down, excuse me. But I think we will have this time around. I don't think the big guys, the people in charge, will be able to stop what's coming. They managed to do it here in 2011. They managed to stop the price of gold of reaching over 2K. And then when, for this period here, gold went to roughly 1,000. So it got cut in half, basically. So that is the past. Now we're going to look into what we have just seen here. Again, don't mind these lines here. For now, they do not really matter that much. But yeah, again, same kind of thing here. We had this huge blow off top, and yes, you have guessed it. It is the March 2020 madness right there. Big spike, and then came the drop again. Huge drop, and then we went sideways. If we were to make some big fat trend lines here, you can see this is our triangle, similar-ish, right, to the ones we had before, where we had this kind of triangle over here, and then we broke down. One thing I want to mention is that we didn't have any retest here. From here, it was just a one-way street. No stopping, basically. And now, if you can follow me here, if it doesn't go too fast here, we have broken right there, and we're retesting a very important golden trend line going back to the low from 2011 and then the low in 2021, and now we've broken down. This is a big deal, and this is the reason why we are resuming up in the gold price, in the silver price, and we have a lot more to come, in my opinion. So the levels that we've drawn before, you can see it there, 64. We have one here. Maybe we should make like a circle, because my circles are not that beautiful. And then at some point in time, we will have like a circle roughly here. Timing wise can be difficult depending on how fast silver goes. But again, somewhere around here, we will have yet another touch where I will think we will go down. That will be support, and we will start to have a little bit of a counter rally before eventually rolling over. Don't mind the timeline here. This is just for, illustration purposes. And wouldn't you know, this is a topping pattern right there. A head and shoulders pattern with a third touch, and then we have the dribble, and then we break on the fourth, in my opinion. We can see how low this one will take us. We can take there, we can add it on top down to here, and what would you know? We are getting to roughly the low here of 2011. So good alignment from there. And again, at that point in time, we will be at roughly 30. Roughly 30 for that move down. That's also a different way to do it. Similar, but different. It's also something that I did on the show with Andy. You can do like a fib extension here, where we take the peak down to here, then we find the top, and then you can extend it a bit there. So you have your levels. And what I also showed there together with Andy right there is there it is the alignment of the big numbers, the big fib levels, which I find very, very intriguing and very exciting, because if you have, in my opinion, if you have such a great alignment, it's got to mean something, right? So I just 1 second here. There it is, my bad. So the alignment again is, in my opinion, extremely aligned with what we have seen before. So again, we can zoom out here on the longer time frame, on the monthly, you can see the big one of the biggest fib extension levels is the 1.618, and that is perfect aligned with the 2011 low right there. Beautiful. The next one, the 2.618, the 1980 low at roughly 15 to 1, meaning you can exchange 15 ounces of silver to 1 ounce of gold. And then we have, the long shot you can say, but still, it makes some sense in my opinion. The 3.618 at 7.8 to 1. And the reason is why that is important to me, and again, it comes back to the alignment, is that, again, this is the ratio of which you get silver up from the ground compared to gold. So in real life, you can say you get 8 ounces of silver for every 1 ounce of gold. Beautiful, beautiful alignment. So to keep in short here, yes, Friday had a bit of a pop there in the ratio due to silver getting whacked a bit here. But again, overall, the 30-weekly moving average is coming down heavily, and we should see some rolling over here for the next, the next few months here. We should see higher silver prices outperforming gold. So yeah, that is my quick take on the gold to silver ratio. Let's look at silver. Let's look at silver. Should we do the weekly? I think we should do the weekly. Yeah, we do the weekly. A bit of history here. The peak in 2011. Then we had the peak in 2020, and we had the, what was it called? The silver squeeze, peak madness, whatever you want to call it. We pierced 30 briefly, and then we collapsed. I remember the day as like it was yesterday. That wasn't a crazy day when it came to the miners. Everything gapped up 10, 20, 50% for some of the miners, 100% even. It was just even more, 200%, I remember. And all that was just given away within that day and the next. It was just, that was one for the records, that is for sure. So ever since, we basically had a huge sideways to down correction. It went on for roughly 3.5 years. And that's a long time to wait. Holy bananas, that's a long time to wait. But now we have done a lot of good stuff on the chart here for the past, few months here. It has been really great. So remember here, we have roughly the $30 level, very important, obviously, because that is, it's up here, by the way. That's the high from 2020. Also here, we actually, in the middle here, we have a neckline coming down there. You can see we tagged it again on the third, tiny pullback, and then we sprung. So we have 1, 2, 3, 4 touches, even 5, depending on how you call it. And ever since, it has basically been an upward movement. 30 weekly is sharply rising. And I said even before that, when and if we break 26, it will be the start of this bull market. The reason is very simply, well, at least the way I saw it, there were a lot of trend lines at level. There were a lot of trend lines at that point in time over here, which suggested to me that, we had the neckline here and a lot of other stuff coming down, the golden rail and all that. That is important. But also, last time 26 acted as the breakdown of when we, turned into a huge bear market. 26 was that level. So again, here, in the way I saw it, were that, again, if $26 were the breakdown level in 2013, where we just absolutely collapsed from 26 to roughly 13. So again, we got cut in half. It would make sense to have that level also be the trigger point for the resumption. That was my take on it at that point in time. And we can zoom in on the daily, and I think that call was pretty dead on. I know some people who actually called it down here, this kind of structure here where you have this moved down sideways, and that 23.5 was the move. Very impressed by that call, because that was basically, the last time we saw that, and it went away. So beautiful call there. But you can see here, we actually rallied into 26, into the neckline, which is right there, right here. Checking back to this golden trend line, and then that was it. It has been higher highs and higher lows ever since. Again, we also attacked 30. We retraced down to 26 just to check back to the big breakout level to see if we really are meaning this time that we're going higher. And yes, indeed, boom, all the way up there. $30 was not a big level at that point in time. You can see we basically cut straight through it into a bull flag, breaking out. And the past few, basically July has been a bit of, just a sideways running correction here. But yeah, overall on a weekly basis here, it looks great here for silver. What targets do I have here in the short term? I think we're going way higher, but short term, the most obvious target is the neckline measured move. 50% from the neckline break gives us roughly $38 for this, setup alone. And then we can also add in, if we want to take the move up here down to the lows there, you can also see that actually the 100% measured move from the March 2020 low gives us 45. I think we will get into the 40s. There will be some overperformance here because silver is it's a small market, very erratic, all over the place. And yeah, there's a lot of shorts in silver. So again, I think, that if we get the correct momentum, I think we have it, but again, and it needs to show, but again, we could easily clear 38 and then, peak out, I think we could rally all the way to 50, in the short term. That is my highest target for the short term here. So a quick summary here is, I think we are on the route to roughly 38, 45. 45 being the 100% measured move from the March 2020 lows. And we could see overperformance that could take us to 50. And 50, as you all know, is a massive, massive level for silver. I don't think we'll break here in the first go. I don't see a reason to it, because there's a lot of people waiting to sell silver, still. And when we get to that level, there will be a lot of people trying to short it back down for a quick profit. And that's exactly what I think will happen. How low can we go? Depends on what formations we are building up here. But I think it could be a quick and quite deep pullback at that point in time. It depends also if it aligns with an overall market correction, then it gets even worse. But again, getting to 50, we could see like a huge check back, and then we should break on the 4th at some point in time. Again, break on the 4th is the best setup, in my opinion, and confirmation. And then when we get there, we will do another video, because at that point in time, we're getting a lot higher targets in the making. But that's not tomorrow. That's not this month here. But again, it should come here within, 2 years or so. Again, timing-wise, very difficult for silver. It's so erratic. Gold, I don't have much to say on gold, actually. Again, we had a 3-year period where we just hammered onto just a little bit north of $2,000. And again, you can see here, we have 1 there, 2, 3, 4. Then we broke on the 5th. And we haven't looked back ever since. Rallied hugely, bull flag, bull pennant. Again, gold, overall, long term, there's nothing wrong with gold right now. Could we take a breather here maybe for some time? Sure. Just to rest a bit here, we could see. But again, I don't see a reason why we shouldn't rally to the measured move of this. In case you didn't know, this inverted head and shoulders there. You have the measured move. Excuse me. You have the measured move, which is roughly again, 2,650. Again, maybe a tad below, depending on how you measure, but we could also overshoot. I know many people has a target of 2,800. Again, I'm not ruling that out. When you have these targets met, you get overperformance very often also, maybe even 3K. Yeah, good round number, and that would make sense here. So overall, gold looks extremely, extremely good. Yes, there will be pullbacks on the way. There will be, 3 months, 4 months worth of consolidation before we go higher, of course. But again, overall, gold is fantastic. I really like gold here. In the other end of the spectrum, we have the Dixie. I had a lot of lines coming from over here, but again, I have removed it just to what I'm focusing on right now here, and actually need to remove a lot of stuff which doesn't make any sense anymore. So here we have it. This is only 1 year, by the way, where we have this triangle coming in here, and we resolve to the downside. And right now, in my opinion, the last kind of resort for the dollar is the 104, roughly $104 level. It has a lot of history in the recent years in the mix here, and especially in the past, what is that, 3 months or so, it has been the level to hold. And this time around, I think the momentum looks really, really heavy. Could we see it bounce and then go? Of course, but I think it's about to give in here, and that is a huge tailwind for gold and silver. The dollar dropping, helping gold and silver. I want to have a chart that is, I want to remove it all here. This is, again, the Dixie, the dollar divided by inflation. And if you invert that, you can actually see that this is why gold is tracking the loss of purchasing power of the dollar, basically. I also covered that, I think, if I remember correctly, on Andy's show. So you can check that analysis there. But also here, in my opinion, it seems like game over. It's a big word, I know, but it seems like game over for the dollar here. It broke down heavily from this triangle here. If we're zooming out, you can see that we are basically at the lows in this ratio. Going back 15 years, you basically are at the lows here. You have it right there. This is the floor. And imagine what happens when that breaks. Then you have a floor that has held for 15 years, holding the dollar up, basically in a range. You can see here we can copy this one, add it on top. So basically in a range, it worked for 14, 15 years roughly, even more, 16, whatever, 15 years. And if we break down, again, these massive levels, they can take a long time. You can get a lot of weird stuff going on, the weeks leading up to it at the level. You can see a lot of, wiggles, and then you basically go straight down. When that happens, silver and gold and will perform extremely well, because they track this one here inversely, and the gold to silver ratio will collapse big time. Boom, all the way down. Beautiful. This is a big chart, a big component to why gold is doing what it's doing. Again, check out the analysis on Andy's show with regarding to the tracking of gold, and why you can see what I'm saying there. So very cool. What else do we need to check? We need to check. I think we are going to look at, yes, right here. We are going to look at the miners, which is also doing incredible things here. The gold miners, which we'll come to in a second, is actually doing better right now. That's often the case. Gold, performs, breaks out first, and silver follows. Same thing here. You saw that also on gold. It broke out 3 months later. I think silver broke out as well. I think we'll have the same here. You can see in the short term, the shorter term stuff here, which is actually, a few years. But anyway, they have broken out, and it looks extremely well here. Short term, tiny double top, but that will get taken out in my opinion. 3 year worth of golden trend line broken with momentum. and the 30 week is coming up nicely. I have nothing to add really. It's a really good chart, and that's also why you see silver miners actually do really, really well. And that's mostly what I'm trying to do on the Substack, is take advantage and find the best miners during this bull market in the silver miners, the gold miners, and uranium also. Copper, platinum, all that. We're trying to find the best and hopefully make the best out of this bull market, which I think is fully underway. Very early, but it's definitely showing the way here. Silver miners looks really good. We have a huge level here, roughly 50. You can see why it's so important. 50, 50, 50. And again here in March 2013, we broke down, and then ever since we haven't been able to get back above. It's just been a ceiling. And again, we have one, we have two, maybe three, depending on how you measure or how you count it. Again, right now here, I'm very confident that we are going to, again, hit that ceiling. Not in a straight line, but again, you know what I mean here. Getting a pullback, and then poof, off we go for silver miners. I think the $50 level for SIL is about to give in. During the next, again, silver miners, they are even more erratic than silver. But again, I will not give a timeline, but the $50 level for SIL will give in my opinion. You can also see higher, lower lows across the board, and this one will be a major higher low right here, roughly. And yeah, it's incredible. What's difficult about the miners is that you can have, and we have had that, some weeks ago we had, I think it was a stock Defiance, which actually went up 400% in a month or so, and then it gave it all back. Excuse me, it gave 50% back in 1 week or so. So it's very difficult to take the volatility that these miners are giving you. But again, embrace the volatility to the upside, and just acknowledge that it will come and it will hurt you when they pull back. And during the pullbacks, again, we also try to find spots where you can add into it. It's very difficult because usually you don't get these perfect patterns that is telling you when to get in. But sometimes they do, and sometimes you can buy into big support and it just bounce straight up, and then it goes further north. So that's cool. Same thing here for the SILJ. The juniors has broken its, it's 3-year golden trend line here. We have the big red up here, and we're going to attack it and then break. That is my honest opinion how it's going to go. And yeah, silver juniors is even again a lot more erratic than the SIL, the big miners. So again, it is very difficult to ride this bull market. But if you can stomach the pain and the happiness, because it will come and it will change very quickly, then I think you should do really well. The GDX is actually one of the most pretty things I've seen in a while, and that tells me something here, that we go back 15 years. Golden trend line, in this case, it's a rail because you have some wicks. So sometimes you have a perfect trend line. Sometimes you can actually make a clone, a copy, and then it frames the wicks. So, but you can see here, in my opinion, we are on the brink of a breakout for the GDX. I will let the chart speak for itself. We had a huge level at 32. We are above. We have momentum, and you can see it's just, we are almost there on the major gold miners to break out. 1, 2, 3, 4. This is where, again, I'm not sitting here to hype anything because I don't gain anything from that. But again, this is where fortunes are made, potentially are made, because obviously it can be a false breakout. I don't think so, but it could be. And then we are all scratching our heads, what the hell went wrong? I don't think that will happen. But again, you will see gold miners do really well, high volatility, when to take profit, when are you correct, when are we rolling over? It's going to be very stressful, but hopefully I can get a, you know, do well. I will not sell the top. That's impossible. But I'm trying my best to get as close as possible. That's all you can do. Have a plan, execute. That's it. The GDX here has only, in quotes, broken its 4-year trend line here, or excuse me, its 4-year triangle there. It's still massive. It has broken out. It's beautiful. We can also add across here that you can also see it's not a trend line where you have had a lot of touches on. You only have like from the top to March 2020, excuse me, September 2020, my bad. And then you have a break here. So, but still, nonetheless, fantastic chart. We have some horizontal levels that we have cleared, and then we have like 2 peaks here, which is also tiny resistance. No, we haven't cleared that one. We haven't cleared it, but again, we have broken out the 30 weekly moving average, which is the one that I use on the daily, excuse me, the weekly, as a guide. Again, I don't trade anything. I'm just using it to see if we are in the stage 4, stage 1, stage 2, stage 3 period, and then I act from that. So it's just like a small guide. I don't use it as much. It's just there. So GDX juniors looks incredible. Well, we have broken out. We have some horizontal levels that we will have to fight. But again, I think if they will give in. They will give in. So I can hear my voice is getting a little bit more edgy, but it's fine. I sound like Batman. He's a cool guy though. I want to show you one last thing, which is also, again, I've posted it a few times. Boom, here it is. Boom, as I like to say. This is, for those of you who maybe are new or don't know, in this case, we have taken the GDX, which is the junior gold miners or explorers, developers, and all that. And we divide it by gold. And why do we do that? We do that to see when the miners really is in a bull market, you can say. When are the miners doing really well? And that is often when they outperform the underlying metal, in this case, gold, right? So we take the miners, divide by gold. Usually when you look at the GDX, you are basically comparing it to the USD. In this case, we are comparing it to gold. And you can see here, again, this is also a beauty. A breakout here. Yes, the month is only halfway, but for now, at least, we are celebrating the breakout here. Hopefully we close above. If we do, then we have a monthly candlestick, a monthly time frame confirmation breakout, where the junior miners is going to outperform gold big time. It's very early, but again, this is exactly what I want to see in a gold market. So you have gold doing well on the chart. You have the GDX itself just, you know, breaking out here, and then also you have GDX outperforming gold, and gold is doing well, and it seems like we are at a stage where the juniors will do even better. You cannot ask for more, in my opinion. It's really nice to see. We will also take here the silver miners, the SILJ, which we looked at, which also looks kind of good. Divided by silver, where are we? Let's remove some of the stuff here. Huge triangle goes back 10 years, excuse me. And now we have broken down from that trend line. But we have also formed, in my opinion, what I think is the bottom for a long time. You can basically take like a time period here and have an idea of when the next bottom will set in, which I think, by the way, will be a lot higher from here. The bottom will be up here somewhere. And then I think we can actually copy this one here. It's pretty, yeah, roughly, right? Roughly the same period, 50 bars. That's 4 years. So again, here the next big low will come in my opinion, in 4 years' time. But it will not be, excuse me, down here, in my opinion. It will be, we will bottom here, then we will start to rally, and then we'll find the low somewhere around here, just as an example. and then we will go higher again. Huge low here is being set up, in my opinion, going to the weekly, where you can actually see it a bit closer here. Oh, the candle here, fantastic. I do think we need a little bit of a pause. That would be perfect, just to reset the daily chart, and then we go. You can see here we have the first, lead in, and then we have, again, you can call it like a double-headed inverted head shoulders. Again, it's not picture perfect, but again, it is one that I'm calling for a potential bottom, and the neckline is at roughly 0.42, 0.42, yeah, to 0.44 in that mix. That is when we are going to go into something like this. The 30 weekly is here, basically flat for 2 years, 1 year, a bit less anyway. And then we check back, and then there we go. 30 weekly is coming here, stage 2 uptrend, beautiful, right? I mean, that's just also a great chart here. And silver miners, compared to when we looked at the junior gold miners to gold, which was on the brink of breaking out, also very low. But again, silver miners here is heavily undervalued against most things. Very, very, very cheap. It's a tiny, tiny market. So when it moves, as you can see, when the miners are starting to outperform the metal, basically you get no pullback. The difference here is basically you have a V shape and then you just snap higher. Here we have a bit of a longer term bottom. So I don't expect, again, it could happen, but I don't expect, just like a straight move up there due to the bottom here. I think it's a bit more, whatever, slow grind. It's just a quick draw there. Instead of this, 9 months and then boom, it's game over. It's over already. I think it will be more slow and more prolonged. Again, it's just my thoughts on that. Yeah, depending on how you make it. Is there anything we should look at here? I think there is. I think we will check in quickly here how gold performs against, where are you? Gold. How gold does against the big markets, because I think that's the last check mark we need, is basically gold against the SPX. You can see here, I actually have some draws here from a last video, I think. So basically, this is the .com bubble where gold started to outperform heavily the SPX. For 10 years, gold outperformed the SP 500 with roughly, from peak to peak, 800%. That's quite a lot. And ever since we peaked there again in 2011, we have just been correcting hugely. But we have also formed a very well-defined triangle here, or like a bullish pennant. The chart for the past 2 years has been very weird. You can see every single time we're getting, close to or even hitting sometimes the 0.5 is where it's getting checked back very quickly. So you can see 0.50, 0.5 is the level to get through. I know we have the blue here coming down. And if we break here, again, I'm not celebrating. I want to see the 0.5 ratio level gets taken out. That's the name of the game. It was the same thing here, ages ago when gold started its move in the 70s. But again, I know gold was fixed at that point in time. So basically you cannot use it to anything because gold was fixed. And then in somewhere around, I would say here, I guess, if I remember correctly, gold started to no longer be fixed to the dollar at that point in time. So, but again, also here, very close in this ratio. We need gold to outperform roughly 15%, so still quite a lot. But again, if you know, the SPX gives back 10% and maybe gold, you know, gains a few, then you're pretty close in that ratio. And yeah, this is the last piece where we are close, but not really that close of breaking out. But yeah, I am looking at this one roughly once a week, just waiting to see that. Actually, I have one more. Also a chart that I showed on Andy, a very, very underrated ratio, gold divided by inflation. And why is that important? Because you can see here that gold is about to become like a tier one asset with regarding to be an inflation hedge. And we are basically on the brink of a huge 50-year breakout in the making. Heavily understated pattern here. Heavily, you know, not many people talk about this. I know people, some are, but again, this is mega. Again, we are about to break. And again, as I've been saying a lot, is that when you're close to these big breakouts, a lot of stuff can happen before we go, because it's so, the bears and the bulls are really fighting hard here, and you will see whipsaw back and forth. But ultimately, this pattern, if you have any, just the slightest, you know, understanding of technicals, if you have been looking at technicals before, you know that this is a hella bullish chart right here in this ratio. Again, gold. I think gold is just amazing. It's a tiny market. Everything looks good right now, in my opinion, long term. Miners, gold, a lot of ratios. I mean, gold. That's all I can say. I think that's it. I don't think my voice would be able to go further much longer. And yeah, it is what it is. As mentioned, guys, I love commodities. I think commodities have, you know, 3, 5, 10 years ahead of it, you know, ahead still perform well, where each commodity will peak at different times. And I'm trying to capture the best move, the best part of the move, hopefully, in uranium, in oil, gold and silver, platinum, palladium, obviously also, and a tiny bit of copper as well. Doing my best there. So if you want to follow me, highly appreciate it here on YouTube, also on Twitter. And if you want the in-depth analysis on stocks where we try to get good entries, it's really difficult in the stocks because they're so erratic, as we talked about, but we're doing our best to get good entries in some quality stocks, silver, gold, uranium. These are the three big ones that we're looking at. You have to join me on Substack. I think that's it, guys. It's midnight here, so it's a perfect ending. Yeah, what can I say? Gold.